Hi guys, good morning and welcome to Trading Hour. I'm Pavitra Parekh. With me are Prashant as well as Sumera. And we have slipped significantly from the day's high right now. So right now the key indices are around, you have Nifty which is around 90 points lower. And if you take a look from the highs, we've seen a cut of around 140 points right now. And the Nifty Bank as we speak, by the way, has moved back into the green, but we did see quite a dip come through there as well. If you take a look at some of the counters which are leading to this pressure on the Nifty Bank, those will come up on your screen. So the likes of IndusInd, Axis, Kotak, all seeing some cuts. But remember, this is after the Nifty Bank has seen a gain of over 5.5% for the month, right? So definitely no big move in that context. It is the auto stocks which are holding up quite well today as well. So those ones will be up on your screen. And it is the IT pack once again, which is leading the decline. So some of those stocks will come up. The likes of Infosys, Tech, Mahindra, HCL Tech, all of these which are some of the top losers. But Prashant, considering the kind of momentum that we've seen, this is not too bad.
I mean, yeah, it's not too bad at all. And by the way, from yesterday's morning, guys, from yesterday's low, we are still 150 points away.
Yeah.
So, you know, it's mild, minor. And I think the big move this week in global markets happened in the US on Tuesday with that, 5% sell-off. And the reaction yesterday by close was 0.4%. I mean, just contrast the two, right? And today we've got another 0.5%. So in total, the reaction to the 5% cut has been about a 1% cut. Although, I mean, yesterday the US market came back up about 1%. So it's not 5 but 4. But in any case, I mean, the point is that there is a huge amount of outperformance that the market is sitting on. While that is well and good when you're playing momentum, but that also opens the market up to, because the market has got so much gains, on the converse side, it's also a market which can give up some of those gains as well, which is what seems to be happening. But, you know, the impulse very clearly has been to try and, try and buy the dips, and it's usually worked out, right, more often than not. It worked yesterday, which was, of course, an absolutely incredible after Tuesday's Wall Street sell-off. So let's see, I mean, if some of that impulse comes into play today as well. Not very much new that you're going to learn looking at the screen today. It's some amount of consolidation, some amount of reversal, that kind of price action. Market breadth has kind of converged. When we started for the first 40-45 minutes, advances outpaced declines for something like 5:1, and now it's become 1:1. Broader markets, like yesterday, have converged once again. So, I mean, full session still in front of us, and it promises to be another interesting one. Samira, hi.
Hi, morning, guys. So let's get started. There's a lot that we have lined up for you. Indices have slipped after a positive start. Autos and energy are showing strength. Banks are taking a bit of a hit. Mid-caps are outperforming. We'll talk about the way forward for the market. Joining in will be Anil Sarin, CIO of Centrum PMS.
PVR slides on the back of a large trade. 55 lakh shares or 9% of equity exchanges hands at an average of 1892 apiece. More details coming up for you in just a bit.
It's a tepid D-Street debut for Tamil Nadu Mercantile Bank. Shares list at 495 rupees a piece on the NSE. That's a 3% discount to the issue price. S. Krishnan, Managing Director of the company, will join in to talk about the listing and the business outlook. All of this and much more over the next 60 minutes.
All right, so that's what's lined up here on the program. Let's get to our first voice, and this is markets we are tracking. What else? Anil Sarin is Chief Investment Officer at Centrum PMS, and he's joining us to take some questions. Anil, great to have you with us here. Thank you very much for your time, as always. I don't know if you've spoken before, Anil, but I just wanted to first set up your thoughts on where we are as far as markets go before we dive into themes and sectors and what you like and not. We've had tremendous outperformance here in India, and the last 5-6% has come very, very quickly, almost in about 10 or 11 trading sessions. Your thoughts, Anil?
No, absolutely. I don't think I can add anything more to what you just said, Prashant. That, I mean, we've had quite a divergence. So now I think we should be consolidating, and I would not be surprised if the market gives up a little bit of the gains. It has been quite a bit in a compressed period of time.
Hi, Mr. Sarin. Good morning, and thanks a lot for joining us. So, in that case, when we have been talking so much about the global picture, about the Fed's upcoming meeting as well, do you think, irrespective of what happens globally, we are likely to continue along this path of momentum that we've been seeing?
I don't think so at all. I mean, we are part of the markets, part of the global markets. Yes, there's a very clear divergence that is happening. India is becoming more and more a consensus kind of a market, buy market. But at the end of the day, there is this global situation which is deteriorating, and all markets are linked. So I'm not confident that we can continue to forge such a path in the face of deepening situation or a worsening situation globally.
Hi, Anil. Morning. I wanted to understand that, if there is this possibility of a pullback, would the preference still be for blue chips, large caps? What is the scope currently to have, mid or small caps in your portfolio?
So if you go back, over a longer period of time, what we have observed is that when things are tough for the economy, when there is a lot of pressure, market participants seek comfort in large caps, in safe kind of names. On the other hand, when there is optimism, when there is more of a buoyant economy, such as which we are seeing in India right now, at that point in time, people look for new names, people look for opportunities. So that favors, small and mid cap. So it's our belief that we are in that situation now, where small and mid cap should outperform the large caps.
Right. No, do you have a view on, from companies that you meet and your own observation about the local, because you started that answer by saying that when, there is general pressure on the economy, etc. The feedback we've been getting from companies we've been speaking to across a range of sectors is that things are pretty good. Maybe at the entry level there is problem and maybe serious problems, but otherwise, premium category of products, things are looking very, very good. I'm talking about building materials. We're a paint company earlier on. We've spoken to real estate companies, consumer good companies, and so on and so forth. What is your own impression of the domestic economy and earnings acceleration consequently?
So we are on the rebound. I mean, fiscal 19 marked the multi-year bottom in terms of corporate profits percentage to GDP. From that time onwards, we have been only going up. Today, I think we are standing at around 4.6, 4.7%. Of course, it's still a very long way off. Right now, it's a similar situation. If you go to the US, there the market consolidation is of such an order that it is around 12% of GDP is the corporate profits over there. I don't think India in the medium term cannot go towards 12%, but we are around 4.6 odd, and there is scope for more, increase in corporate profits. So, to your point, yes, absolutely, there are many Indias, and to make a generalized statement is not correct. So there are people who are spending, you only need to look at the banking credit growth, or you look at the auto revival, and if you talk to the auto people, they'll tell you it is the higher end models which are doing better than the entry level models. So clearly, there is a demand impulse. There is a lot of growth ahead of us. So yes, India is doing well. The international environment obviously is not that great.
Okay, if you can just talk about a few of these sectors, and since you did mention the auto space as well, we've already seen quite a bit of a run-up in these stocks. Do you think that at these levels, they still look attractive to get into? And within the autos, what do you like? Which way would you play? Do you look at the two-wheelers? Do you look at, the standard CV players?
So yeah, I mean, the whole auto complex, if you see, the ancillaries, the OEs, everything has risen. The market obviously discounts ahead of time the rising earnings that is expected. As far as we are concerned, yeah, we are more constructive on CVs. You can play directly, but that's not such an easy way to do it. You can play it indirectly through the ancillaries that supply to the CVs. These cycles tend to be long for CVs, so we are entering a kind of a period for the next few years. CVs should continue to do well. Within two-wheelers, again, there is, certain two-wheelers which have a unique differentiation. Those should continue to do well. Maybe we have bitten off quite a bit right now, so there could be consolidation. But otherwise, for the next few years, the auto sectors, especially the commercial vehicles and select two-wheelers, should do well.
Okay. Anil, times like this, when they say, when there's a lot of upheaval going on in the environment around you, maybe even globally, it also gives rise to great opportunities, right? So are there any tactical calls that you're looking at, or, any sort of contra bets?
Look, I mean, investing is always about, anticipating where the market is going to move rather than looking at what has already happened. So clearly, we also in our portfolios, we will look for well-known names, those that are performing today, but also lesser-known names or those companies, those opportunities which probably could be, coming into prominence in times to come. So that's how you create a portfolio that outperforms. And at any given time, I mean, there would be corporate actions happening, some mergers, demergers would be happening, or there could be some sectors that would be coming into the limelight. Like nowadays, healthcare or hospitals are becoming more, appreciated by the market. There are two sectors like defense and mining, which they haven't had such a big impact on corporate earnings in the past, but those sectors going forward should become a larger and larger component. And in fact, if I were to make a broader point, there is this coordinated kind of a revival in Indian economy. Many of the old sectors which weren't doing well have now started doing well, and on top of that, you have to overlay mining and defense. So as such, we are pretty bullish that over a period of time, corporate profitability should surpass what it has done in the past.
By the way, the market is down 120, so which basically means that from yesterday's low, which is 17,770, we are about 100 points away. So let's see. I mean, does this get a little bigger, or it stops here? Futures, the Nifty futures is also turned into a discount. It's blinking red and green, absolutely flat. 17,885 on futures, 17,883 on the spot. So just 2 or 3 points, but that's slipping in and out of the discount as well. Anil, you like logistics as a space, right? What exactly? What subsegment? Is it the express parcel? Is it a sort of company like All Cargo? We have the management with us, which is also into sort of global shipping, etc. Or very local focused express shipping, more dependent on sort of e-commerce, etc.
Yeah, so we are clearly on the local side. Internationally, there are a lot of moving parts, and so that's harder to sort of project. But domestically, I mean, at a broader level, as consumers, we have enjoyed the benefits of express delivery, on time, traceable, trackable, etc., etc. Now the corporates want the same, and there are very few players. It's a very concentrated. It's a very, very small set of companies, and they are beneficiaries of all the investment that have gone into roads and railways, etc., etc. So they have the brand, they have the distribution, they have the IT system, very, very importantly. So, as more and more people move from unorganized on the corporate side, these players are poised to do quite well. So you will be, I mean, we have been surprised, and we feel that going forward as well, there will be more surprises in store as to how high the operating margins can go through this phenomenon of operating leverage. You've already made the investment. As more and more people adopt your solutions, incremental expenditure being lesser, you can see rising profitability, even from the current high levels. But focus is on domestic.
So, Delivery, Blue Dart, TCI Express, Gati, these kind of names?
Yeah, I mean, the whole sector should be doing well, yes.
Okay, and tomorrow we have the National Logistics Policy, which is going to be unveiled as well. So I don't know what that can do, provide a roadmap, bring all of the moving different parts together, so let's see. That's going to be interesting to watch as well. Anil, it's a pleasure. Thank you very much for joining us. Great speaking with you here on the program. The market's down 135 points, and we're at about, 17,866 at this point in time. Let me just take a quick look at sectors where there is this pressure, which is more and more evident, and then we'll take a quick break. So we have the real estate index, which is down 1.5%. It's losing the most. It's followed by pharma, which is down 1.5%. That's real estate, and then pharma will come up 1.5% lower. IT is down 1.5%. IT, even though the market did so well yesterday, it was down 3% by close. It's down another 1.5%, so no luck there. And you got the healthcare index, which is down 1.5% as well. So it's pretty broad-based, actually. Easier to count what's up, and that's on only auto and energy. At least two large indices which are higher by about 0.75%. Actually, auto is the only one which is meaningfully higher by about 0.75%. Others are more like flat, energy, etc. But more down than up, most definitely. And I think the breadth of the market is also now negative. Yeah, 1,200 stocks are lower and about 800 stocks are higher at this point in time. We'll take a quick break. First on this program, we'll come back and we discuss commodities in focus. Oil's made a move higher. Manisha is going to be joining us to talk about that and more. Stay with us.